How Canadians can legally recover a decade of unclaimed tax benefits. Did you know the Canadian government may be holding on to money that actually belongs to you? Not because of an error, but simply because you never claimed it but missed it. Every year, millions of dollars in tax credits, deductions, and benefits go unclaimed by Canadians. Every time you get paid in Canada, the CRA is taking income tax directly from your paycheck. But here's the important part most Canadians misunderstood. You only get one chance each year when you file your tax return to claim your deductions, credits, expenses to recover income tax deducted. But that's not true. There is a 100% legal way to get a refund from your past 10 years of taxes. There's a powerful legal provision built into the tax system called Taxpayer Relief Provision that gives you a second chance to go back up to 10 years and recover money from CRA. In this video, we're going to break down exactly what is the Taxpayer Relief Provision, how does it work, what can you claim or adjust, how can you use it to potentially recover refunds. What is the Taxpayer Relief Provision? The Taxpayer Relief Provision is a part of Canadian tax law that allows the Canada Revenue Agency to be flexible and fair in certain situations, and taxpayers shouldn't be unfairly penalized. Under this provision, the CRA has the authority to cancel or waive penalties and interest, accept late or amended tax elections, issue refunds or reassess tax returns beyond the normal time limits. This framework is outlined in Information Circular IC07-1R1, which serves as a guide to how these relief measures are applied. How does this provision work? Normally, the CRA has a 3-year window to reassess your return. After that, your file is considered closed. But this provision allows you to go back up to 10 years from the current calendar year and request adjustments to your previously filed tax returns. Understanding Subsection 152, 4.2, the 10-year adjustment rule. Now, let's talk about the part that can directly put money back into your pocket. Subsection 152, 4.2 of the Income Tax Act gives the Minister of National Revenue the discretion to reassess your tax returns and issue refunds even after the standard reassessment period has expired. This law allows you to go back 10 years from the current calendar year. If we're in 2026, you can request adjustments for any tax year ending in 2016 or later. However, there's an important detail most people don't realize. This is a rolling window. Every January 1st, the oldest eligible year drops off permanently. And if you don't claim it, then the government keeps it. What can you actually claim? This is where things get interesting. Many Canadians miss out on valuable credits and deductions simply because they didn't know they qualified. Some common examples include disability tax credit, caregiver credits, medical expenses, moving expenses, tuition and education credits, employment-related deductions. Even small missed claims over multiple years can add up to significant refunds. And it's not just about credits, but deductions as well. If you were charged penalties or interest due to late filings or unavoidable circumstances, those may also be reduced or eliminated under separate provisions within the same relief framework. The Minister of National Revenue may grant relief from penalties and interest where the following types of situations exist and justify a taxpayer's inability to satisfy a tax obligation or requirement. Extraordinary circumstances. Actions of the CRA. Inability to pay or financial hardship. Example: a first request made in 2017 for any interest that accrued during the 2007 and later calendar years is eligible for relief. Any interest that accrued during the 2006 and previous calendar years is not eligible for relief. A taxpayer has a tax debt for the 2004 tax year and makes a first request for interest relief in 2017. The minister may grant relief from the interest that accrued during the 10-year period from January 1, 2007 to December 31, 2016. The interest that accrued before January 1st, 2007 is not eligible for relief. The CRA will approve a refund or adjust the amount you owe only if both conditions are met. You filed your tax return or adjustment request on time. The correction you're asking for is legally valid and hasn't already been applied to your account. For making a request, to ask for a refund or a reduction of amounts owing under Subsection 152, 4.2, individuals should fill out Form T1-ADJ, T1 Adjustment Request. How can you use this provision? The catch: this provision is not automatic. There's something important you need to understand. This provision is discretionary. That means the CRA does not automatically approve every request. You must fill out T1 Adjustment Request for the year. Individuals or their authorized representatives can apply for a refund. The request is accurate and properly supported with documents, an explanation for the adjustment they are requesting. Why do so many people miss this? The reality is, taxpayers and accountants and tax software are typically designed to ensure compliance on the current year. And tax laws change frequently. What you didn't qualify for in 2017, you might qualify for today, or vice versa. Identifying these opportunities requires a detailed year-by-year review with a strong understanding of how tax rules have evolved over time. Why a professional review matters. Reviewing up to 10 years of tax returns requires an in-depth approach, analyzing each tax year individually, applying the correct rules for that specific year, identifying missed opportunities, ensuring all claims are properly documented and defensible. This is where expertise becomes essential and where family tax recovery comes in. How family tax recovery helps. Family Tax Recovery is a Canadian firm that specializes exclusively in reviewing past tax returns to uncover missed credits, deductions, and refunds. With over a decade of experience, their team has helped Canadians recover millions of dollars in refunds from the CRA. They've built a strong reputation for their work, reflected in their 4.4-star rating on Google, and are recognized as a legitimate and trusted service in this space. Your accountant focuses on filing your taxes each year. Family Tax Recovery specializes in performing a comprehensive, retrospective review. In-depth analysis of up to 10 years of your past returns to identify opportunities that may have been missed. Their approach is highly specialized and rooted in a deep understanding of tax law and historical changes in credits and benefits. The Family Tax Recovery review process is completely free. There are no upfront fees. You only pay if they successfully recover money from CRA for you. Who should consider this? All Canadians over the age of 20 and have been filing taxes for several years. Especially, your financial and marital situation has changed over time. You've had medical expenses or caregiving responsibilities. You've moved for work or education. You've relied on basic tax filing without detailed review. Even if everything was filed correctly, that doesn't mean everything was optimized. Final thoughts. The Taxpayer Relief Provision exists for a reason. It ensures fairness in the tax system. It acknowledges that mistakes happen, but it's not something that happens automatically. So the real question is, if the government owes you money, or if you're curious about what you might be missing, consider getting a professional review of your past tax returns. Visit familytaxrecovery.ca and sign up for a free 10-year tax review. Because at the end of the day, it's not just about taxes. It's about making sure you only pay what's fair and reclaiming that is rightfully yours.